Hello friends, you all know the Aditya Birla Sun Life Frontline Equity Fund, which is a flagship fund and has got a long track record of consistent performance. And I've been managing this fund for the last 19 years. The Frontline Equity Fund has four basic tenets, which it follows. First is the core of the portfolio, which is around 60 to 70% of the portfolio allocation. These are companies typically which we will hold from a longer term perspective, and companies which we expect them to double their returns in the next 3 to 5 years. These are companies which are typically growing faster than the industry in which they operate, or growing above the nominal GDP growth. These are companies where the ROC, or the return on capital employed, is above the cost of capital, and the companies generate reasonably good operating cash flows. Also, they are run by capable management which are taking the right capital allocation decisions and have the vision to really transform the company if there are any disruptions in the market. And finally, it boils down to valuations. We are looking at companies where the valuations are reasonable compared to their historical average. We don't want to buy a company at any price. The second tenet is about the balance of the portfolio, which is roughly 30 to 40%, which is kind of a tactical in nature, wherein we are trying to capture some of the broad macro themes or the sectoral trends, or looking at stocks which are either contra or cyclical, to really capture the short-term performance. The third tenet of the fund is the disciplined approach of the fund, which it takes in terms of taking measured bets at the stock level and at the sector level vis-a-vis the benchmark. And this is essential to ensure that there is consistency in the fund performance in the beating the benchmark across various market cycles. Also, there is discipline in terms of booking profits when the stock reaches a particular target price, and then looking at other opportunities where the expected return is much better. And finally, the fund also takes exposure to mid-cap and small-cap stocks within, say, 10 to 15% of our portfolio. The idea is to generate alpha, and companies where we think that the long-term outlook is significantly better, and companies typically which can compound over a long period of time. The fund also in a way is agnostic to a particular style. While we have a growth bias and we follow the growth at a reasonable price, or the GARP philosophy, but in the fund you will find good measure stocks with growth oriented, value stock, contra stock, quality stocks. This ensures that the fund is able to do well across the various phases in the market.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.